On the 11th of September, I gave you advance warning that Atom, aka Cosmos, is likely to plummet down towards $6 and that descent has begun. I'm going to give you the 3 technical reasons of why it's highly probable that we're going to get a continuation to the downside. Keep in mind that we can only ever do probabilities and never certainties. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Atom. So this is the video that we did on the 11th of September. And what we said in the video itself, you can go back and watch it, is we've been seeing this corrective overlapping wave sequence. We've had this impulsive pump. We are likely to see what's called a wave fall top and then some type of movement to the downside where this low is exceeded. And that's where we got the $6 from in terms of plummeting towards $6. So what we're going to look at today is what's happened since then. Well, if you can look at the market, what Atom has done is it has made a nice big move to the downside. It's looking like it's continuing to the downside and it's taken out a swing low over here. So it's been a big move. It's under $13 now. So $6 is still far away. But today I'm going to cover the 3 technical reasons that you want to be aware of that Atom is likely to continue towards the downside. Again, probabilities, never certainties. By the way, if you like what you're going to see today, because we're going to cover pattern, we're going to cover price, a few other things as well. I've just launched my free 4 Secrets Crypto Trading Masterclass. The link is in the description. It will just take your trading to the next level where you can really see the psychology of the market, fear and greed playing out, so you can be 2 steps ahead. And that's how we were 2 steps ahead with Atom. A lot of my community was asking me about this, my private community. And we said, look, looking at this, even though the price is pumped, when we're looking at the macro picture. So when I'm looking at the macro picture, I just zoomed out. I'm going to show you this. Zoomed out with Atom. When we zoom out, we see that it's made actually some textbook patterns. Textbook, because the markets tend to always move in 5s and 3s in terms of corrections. What do we see here on a macro scale? Now we're talking about big time, right? 1, 2, 3, 4, massive pump, topped out, and we've had this first part of the correction, second part of the correction, and it looks like we've got this final part of the correction, but it's breaking down to a 1, 2, 3, and it looks like a 4, and then a final 5 to complete the correction. And that's really, really common with all markets, especially with crypto. And then we'll tend to find we'll get a continuation to the upside. So we're going to look at the 3 technical reasons, right? So let's just zoom back into this part of the market. And I just want to get really, really focused and precise. So the first is a very powerful thing called overbalance of price. So if I just get rid of these lines just so we can see it a bit clearer, what we're going to do is I'm going to show you how big the price movements have been in the past on the way down, and has the recent one been bigger. And I'll show you what the significance of this, because this is called a pattern reversal signal. It's an indication that the market's going to move towards the downside. So this is a prior move down. I'm just going to draw it like this. We've got, this was another prior move down, which was smaller than the one that we just drew. This was a prior move down. And this was a prior move down. And then last but not least, this was a prior move down. So out of these 1, 2, 3, 4, 5, which one of these 5 was the biggest selling behavior? Well, it's clearly this one, right? This one's the biggest. So this is the one that we're going to keep. And what we're looking for to indicate to us that the selling pressure is bigger than the buying pressure is the recent movement to on the way down. Was it bigger than the former? This will make perfect sense to you in just a second. So the recent selling behavior was from this high over here down to this low over here. So if we draw this out like so, I'll change the color. We'll just change it to, let's just change it to green so we can just separate from the 2. And if I just take this arrow and move it right next to this one, you can see that the green is bigger than the red, right? That's called an overbalance of price. So that's the first indication that we've got a trend reversal. The selling pressure has been the biggest since Atom has been moving sideways to up, but in a corrective form. So that's signal number 1. Now we want to look at the structure. So markets move in corrective patterns and impulsive patterns. And this is going to be really clear with Atom because this is what we've seen with it. So if we just zoom out like this again, if we just do a comparison between this movement down here and this movement up here. If we do a comparison, if I just move the arrows to the just below and just to the left, look at the pattern structure. Here it's impulsive because it's non-overlapping waves. It's very one-directional, right? You can see that really clearly now that we've drawn it. Whereas on the way up, it's been very corrective, meaning that the waves are overlapping. It's almost like it's struggling to go up. That's an indication of a corrective pattern. So what we're going to do next is on the second signal, to get confidence, if you're shorting the market, if you're taking profits, it's basically, is it likely to continue to the downside? That's what we want to really look at. So the second part of the market, or the second technical reason, is what is this? Is this corrective or is it impulsive? Now, to be totally honest, it's hard to see on the daily chart. It's almost impossible to see on the daily chart. So what we're going to do is we're going to go to a 1 hour chart, and the waves will become clearer because rather than getting 1 bar a day, we get 24 bars a day. So I'm just going to click on the 1 hour. I'm just going to zoom back in over here. And I've drawn this in already. And we can see now, hopefully you can see, that is actually impulsive on the way down. And this is really significant. The reason why it's significant is that this wave, or these waves, are non-overlapping waves and are quite impulsive to the way down. So normally, if we look at the structure of Atom, if I can get in as much data as I can, most of these waves prior were of a corrective nature. That looks kind of impulsive. That was relatively corrective. So it looks impulsive to the downside. So that's the second signal that tells us, right, we're probably going to see a continuation. So there's a third signal. And by the way, I cover these 4 secrets in a lot of depth in my crypto trading masterclass, because what we're aiming to do is become the casino, stack the odds in our favor, where, one pattern reversal signal, like the overbalance of price, is a good signal, but we're going to have a confluence of events. We want a few things telling us that the market is likely to do what we want it to do, and then place our trade, going short, going long, taking profits, and so on and so forth. So the whole idea is that we get 2 steps ahead of the market so we can anticipate, and when certain signals are met or conditions are met, we can place an order, place a trade, or manage our position. And that's what I cover in the Crypto Trading Masterclass. It's free. The link is in the description. It will take your trading to the next level. Last but not least, we're going to go on to, if I just pop out of this chart, I have a 4 chart set up. In the top left-hand corner is where I keep my weekly chart. So I just want to spend a second on this. There's a couple of factors that really indicate to us that we're going to see sideways to down for maybe 1, 2, 3, maybe 4 weeks, And it's this momentum indicator. So momentum indicators, they literally just measure the rate of change. And there's thousands of them. My favorite by far is something called the stochastics RSI. And what we want to just do is keep really, really simple on the macro picture, which is a weekly chart, is when the blue line goes below the red, does it marry up with local highs? Well, this one was yes. We had a big movement to the downside. This one was a yes. We then had a big movement to the downside. And then recently we had 2. We had one over here and we had one over here. So this crossover was lower than the second one. And this one was higher. The price went higher. That's called a bearish divergence. And that was another signal, an extra signal that said we're likely to see sideways to down. But the main thing I wanted to emphasize here, sorry, I got a tickly cough. Let me just remove this as well so we keep our charts nice and clean. Is until this red line and the blue line go below this black line, which might take another 1 or 2 weeks, the emphasis is, or the probability is, that the market is likely to move sideways to down. And really, because this part of the market has been corrective, it's highly probable that the market, Atom, this is what we're talking about, is going to exceed this low over here, sideways to down for a number of weeks. And this is why we were emphasizing $6 because of this low, this corrective structure. And now we've got a few signals that said, look, we're probably going to see sideways to down. I'm going to finish with one last thing before we wrap up. Is I always have this thing, which is, it's called double think. Even though we've got those 3 strong signals that said sideways to down, you always want to have the opposite wave count thinking, the opposite narrative. Could we just be seeing a correction and then a continuation to the upside? So the minimum that a market tends to do is 3 waves. So we've got this first wave down, we've got this second wave up, and it looks like we're forming this third wave down. So the minimum would tend to be this if it doesn't do the full continuation to the downside. And the reason that's important is you can manage your position in a way that even if it only does the minimum and then for some reason does some type of continuation to the upside, you can manage your risk in this zone down here. So if you like today's content, like, subscribe, hit the bell notification, take the masterclass. I'm telling you, you'll love it. It will just get you thinking in a way which allows you to anticipate market movements before they actually happen. The link is in the description. It's absolutely free. Let's finish on a quote. I don't want to read a quote from my book, but actually, I'm going to go over a quote off the top of my head, and it's this one. Beneath every mountain, or beneath every success, is a mountain of necessary failure. Failure and success have a direct link. In other words, you can't succeed big time unless you've gone through certain learnings. And to get big learnings, you have to sometimes go through failures. And there's 2 ways of learning through failure. One is making the mistakes yourself, or the other one is a bit less painful, and the shortcut is learn through other people's mistakes. Coaching, mentoring, programs, masterclasses, courses, etc. And then you can kind of quantum leap. And then when you're at a higher level, you make different level of mistakes, but you will learn from them. And it's a never-ending, consistent journey, and it's just learning. It's a learning curve, learning curve, learning curve. So beneath every success is a mountain of necessary failure. All right, let's see how Atom unfold. What do you think? Let me know in the comments below. I'll see you soon.